Are you ready to take your investment game to the next level? Introducing Digital Investor, your ultimate guide to mastering the digital marketplace. Whether you're a seasoned pro or just starting out, Digital Investor brings you cutting-edge game theoretical strategies, expert insights, and real-time tips and tactics to analyze, evaluate, invest, and grow your wealth. Don't miss out on the digital revolution. Visit www.nickblacknext.com and start your journey with Digital Investor today.
All right, I think we've got it. Hello. All right. Okay. Bam. No, that's too big. I'm gonna go right in the middle. Nope. Better. Same. Kind of the same. All right. Well, it is what it is. Hello. And hello. Always here. Seldom live. Uh-oh, my cats are beefing. They're about to start tearing up some furniture. It is what it is. You're not going to keep all that furniture here today. Gone back to Ashley's furniture tomorrow. All right. Today, we are going to talk about avoiding the catch-up fallacy, the psychological trap of over-leveraging and the gambler's mindset in investing. You know, I got to catch up. I'm late to the game. Everybody's ahead of me, that kind of whole thing. Yeah. Yep. We're going to talk about that. Hello. Good morning. We'll also knock out your questions. So any questions that you guys have, we can knock out questions because that's kind of what, office hours is. Well, originally that's what it was. We just answered questions for... It was 30 minutes. It was office hours was 30 minutes, which is weird because how can you say hours? It's not even plural. But yeah, it's grown to be a little bit longer. And now we do kind of we try to throw some kind of educational component to it and put some markets up in the background just to see what's going on. Of course, bad ISM numbers came because, of course, and that's, put a beating on the regular markets, which, put a beating on the corn, which put a beating on everything else. So you can see everything's kind of playing off Bitcoin from there. So still not bad. We're at 3.6 trillion. It's a pretty good market. But today is down from yesterday. Yesterday was a pretty good recovery, and today is kind of giving a little bit of that back. Is there any standouts? Oddly, Matic is up today, which doesn't make a whole lot of sense, but nothing that ever happens with Matic makes a whole lot of sense. I'm sure they have some spammy new association they've come up with. Let's see. What was the ISM data? It was weird because in my CNBC app, prices were so wonky that it wasn't even showing prices. So it was weird. Stocks fall after weaker economic data and more tariff threats. Dow loses 200 points, so it just gave back some of the stuff from yesterday. Trump says JP Morgan Chase, Bank of America, rejected him as a customer. Well, he does declare bankruptcy a lot. I guess the big worry right now was a bunch of threats about pharmaceutical tariffs. So that's a big deal. Let's see. Indexes took a swing lower after the ISM Services Index flatlined in July and indicated higher inflation and lower employment. Yeah, of course. Services make up 70% of the U.S. economy, so slowdown in the service sector could mean trouble ahead. Yeah, again, none of this is new. None. You've been able to see this for 18 months. I don't know why anybody thinks any of this is new. None of this is new. Anyway, stocks were bogged down by Trump telling CNBC that tariffs on chips and semiconductors, as well as pharmaceuticals, were coming soon. He said, we're going to be announcing on semiconductors and chips, which is a separate category because we want them made in the United States. Trump said, adding that he'll announce the new plan within the next week or so. Okay. And that came following an up day, which was yesterday, after the markets completely S the bed on Friday after the revisions and the BS over the BLS. And it's pretty funny because more people are coming out and saying while they don't necessarily think you should fire the person responsible, maybe the whole system that the BLS uses is corrupt. Corrupt meaning bad data. And if it's always bad by as much bad as it is, end it. Just reset the whole goddamn thing and start over. Aren't a lot of chips already made in the U.S.? I don't think anything's competing with TSMC, Taiwan Semiconductor. I don't think so. Not many. I would say not many on the whole. Not many. Let's see. Today we're seeing the market pull back a little bit. Equities have been on a nice run. What is it? They were on a run yesterday. Friday they were terrible. We're probably due for a period of consolidation, some backing and filling, so to speak, said some idiot over at U.S. Bank Asset Management. I didn't even know U.S. Bank was still around. I thought they were done. I am surprised U.S. Bank still exists or that anybody works there. Clearly, valuations are elevated. This is not a cheap market. He added, inflation is benign. Interest rates are on the cusp of going lower, and earnings are trending higher. That presents a favorable backdrop for a risk-on bias. So he just said the opposite of what he just said before. He said we're due to some backing and filling. We're due to some consolidation. However, inflation's benign, interest rates are on the cusp of going down, and earnings are trending higher. Therefore, it presents a favorable backdrop for trending higher. Well, which is it, dude? In the same paragraph, you said both. These guys, man. And no one ever calls them out. Like on CNBC, when these guys are talking, no one ever calls them out and says, hey, Steve, you just said the opposite thing in that sentence as the sentence before it. The exact opposite shit. You want to pick one? You just want to pick one? Or you just want to be some whimsical jackass that comes on here and every other sentence is the other direction? These guys, man. Make sure you say something, but don't say anything that anybody can pin you to. Don't actually make any opinion. If you have an opinion, you're screwed. You need to be vague and incomprehensible from a bank that doesn't even exist. And then it just talked about earnings are coming from Snap, AMD, and Rivian. Oh, I bet the Rivian earnings are terrible. But that's after the close. Although about 370 companies in the S&P 500 have already reported their earnings for Q2, more than 81% beat expectations. So that's good. There you go. I guess we're all winning. Yes, they're building a large facility, but it's not built. And those things take a long time. And then you have to have the feeder facilities. Remember, it's not just the one plant that does the one thing. You need places that have silicon, and you need all the precious and rare earth minerals that may be a part of that process. You need the acids and solvents that are part of that process. And those are all sub-refineries because they're doing it on such scale that you need refineries for the individual elements. It's those things are giant cities. Those chip facilities are giant cities with a bunch of feeder facilities, feeder refineries, and different kinds of facilities built all around it. It's not just set it up next year. It's like set it up next 7 years. The White House is preparing an executive order to fine banks. Yes, I saw that. Banks that discriminate against crypto. Yes, that was. Let's see. Let's see if it's part of the he got rejected part. President said he approached Bank of America to deposit $1 billion and was told the bank couldn't provide him an account. Can you imagine a bank turning down $1 billion? He said JP Morgan Chase informed him that he had 20 days to move hundreds of millions of dollars in cash to another bank. Donald Trump said that the two largest U.S. banks previously rejected him as a customer, reviving claims that conservative clients were being unfairly denied accounts. You know, that goes all the way up. At JP Morgan, that goes all the way up to Jamie Dimon just not liking Trump, period. I don't like Trump. I believe I'm sophisticated. I don't think he is. He can't keep his money here. And I would say, cool, you just lost your status as a prime broker with the Fed. You can no longer deal treasuries. Fuck you, Jamie Dimon. But that's not what happens these days. That's what should happen, but that's not what happened. Let's see. Bank of America, Brian Moynihan said, we can't do it. Trump said, so I went to another one. I ended up going to small banks all over the place. I was putting 10 million here, 10 million there. Jesus. That's funny. Let's see. Semiconductor tariff plan. Yeah, I saw mention of it. Trump says new. Yeah, it moved off of the news feed. Anyway, it was there. But yes, you're right. Maybe it's in the crypto news feed. Let me look. Let's look at crypto news feed. Crypto news feed. Oh, Galaxy slip. Good. So Novogratz, the guy that loses money all the time and perpetually. He's the creep that runs Galaxy. Remember, quick background. Worked for Goldman Sachs, got fired. Left for personal reasons. Drugs. Started his own fund called Fortress. Got kicked out of his own fund by his partners. Why? Personal reasons. And he likes the liquor. He likes the drink, and he likes Coke. That's what the word on the street is that he likes to party a little bit. And people thought, well, maybe that's not the guy we want running our money. So he gets booted out of his own firm. So he can't open shop in America. So he goes to Canada, where listen, if you go to Canada to open your business, you've told the whole world, I am a failure. Period. That's why you go to, it's nothing wrong with Canada. But if you leave the United States and you can't run your business in the United States and you go to Canada to run your business, you're a fucking failure. Period. Anyway, so Mr. Failure starts Galaxy Digital, which just hemorrhages money, dude. They lose so much money. This is the guy that got a lunatic, it called lunatic tattoo on his arm because he was so into Luna and UST. Yeah, I'll put all my clients' money here and I'll get 20%. And I'll get a piece of that forever. It's easy. Infinite money machine. Thanks, Do Kwon. Except that none of those guys can do math, Mike included. Maybe he should stop doing so much fucking cocaine and he should do some mathematics. Anyway, his company loses money all the time. That's all they do. That's all they know how to do is lose money. Every big loser they've been involved in. You name any asset that's gone from 1 to 100 to 0, Novogratz owns it because they do not know what they're looking at. They have no clue about the market. They just don't understand how things move, which is weird because when you listen to him talk, he's very polished. He doesn't sound like a jackass, but that firm is a bunch of jackasses. They can't invest their way out of a paper bag. Anyway, Helmed by CEO Mike Novogratz, the firm secured the entire $800 million of HPC capacity at Helios after CoreWeave exercised its final option. So here's what we know. Galaxy Digital reported $166 million in second quarter operating income. Most of that was through one OTC Bitcoin deal. One. And by the way, most of their losses ate up most of the gains. They made about $220 million on one OTC deal. Remember the 80,000 Bitcoin? 80,000. So not only the price of Bitcoin is way up compared to last quarter, and they made money on that, and they made $220 million on one deal, on one OTC deal, they still only came in at $166 million in the good, right? Their net income, so they reported $166 million in second quarter operating income, $30.7 million in net income. They only turned $30 million in income after bringing in on one deal $220 million. I guess what's the easiest way to make 30 million? Start with 220 million. These guys are awful, man. They are awful. Anyway, let's see. He said global markets revenue rose 28% quarter on quarter to 55.4 million, despite a 22% drop in trading volume. CoreWeave's exercised its final 133 million MW option at Galaxy's Helios campus. I don't even know what that is. Helios campus. Helios campus. Okay. Anyway, a modestly hot name since obtaining a U.S. license in the NASDAQ a few months back. No, not a hot name. Galaxy Digital. Do not buy Galaxy Digital. This is run by idiots, man. Anyway, it's selling off. It's not just selling off some. It's down 8% on the day. That's not like a little sell-off. In crypto, that's a little sell-off, right? If Bitcoin's down 1% and you're down 8%, you fucking suck. Your business is garbage. Anyway, sorry. I was going to do better about profanity. I was going to do better about caffeine. I failed on both of these. We have to admit our failures. We have to admit our failures. We have to move forward. A failure is just a signal for better performance in the future, says my book. Says my book. You don't dwell on the failure. You use it as a signal to move forward. We're going to talk about that today. Catch-up fallacy. Anyway, so yeah, their Galaxy selling off some, almost 10%. That's not barely selling off some. That's getting destroyed because, again, you are a loser. Global markets revenue rose 28% quarter on quarter, despite 22% decline in trading volumes. Galaxy outperformed broader market trends. I don't think they did. The firm's average loan book grew to 1.1 billion versus peer Coinbase hitting 879 million. Assets on Galaxy platform rose 27%. There's a bunch of idiots to 8.9 billion through though adjusted gross profits and asset management fell 26% due to lower on-chain activity. Yeah, because people don't trust Galaxy Digital with their money. And the ones that do are idiots. They're idiots. You know what, Barry? I'm not even drinking coffee right now. I had these protein shakes, and you can get the Premier Nutrition ones. They're really yummy. And they have a latte one. And the latte one has caffeine in it. It's like getting a glass of it's like getting a cup of coffee infused into your protein shake. Say what? Yeah, that's looking down into the valley. Sherman Oaks, Studio City, Burbank. If you look past my left shoulder, airplanes that go up and down there, that's Burbank Airport. Well, it would be there. Widemore would be there. Van Nuys Airport would be that way. So the planes that are like, yeah. Anyway, that's that. That's what that be. Okay. Let's see. Galaxy separately agreed to acquire 160 acres of adjacent land, including a 1 gigawatt interconnection. Request potentially expanding Helios capacity. Okay, so they're just getting into data farming. Yeah, that's probably not a bad business. I'll give it to Galaxy on that. That's probably not a bad business because as far as investment managers, you're terrible. So as long as you can get away from investing money for people and just sell data or sell data capacity, I think that's a good idea. See? Look, even they can turn a corner. How about that? The firm ended the quarter with $2.5 billion in total liquidity, including $1.1 billion in cash and stablecoins and $1.3 billion in net digital assets. Corporate debt stood at $1.1 billion, so you got to back out that debt that they owe. The company's digital asset holdings as of June 30th include 17,102 Bitcoin valued at $1.8 billion versus 13,704 Bitcoin valued at $1.3 billion 6 months ago. The third quarter is off to a strong start because the market's off to a strong start. With record activity in July as Galaxy helped facilitate the sale of over 80,000 Bitcoin and secured the final tranche of an AI HPC compute capacity, final tranche of AI compute capacity at its Helios data center through a deal with CoreWeave. Shares are lower by 8% Tuesday, alongside a sell-off in crypto, with Bitcoin shedding more than 1%. I like how they said Bitcoin's down, shedding 1%. 1%? What the hell is 1%? 1% ain't shit. That's not a sell-off. 7%, 3, 6, 5, that's a sell-off. 1%? Come on, bro. There ain't nothing in crypto. Anyway, that's it. Galaxy Digital's a fail. Don't invest in it. Let's see. For those, I found this interesting. For those worried about timing the Bitcoin market, a look-back call might be the answer. This option is particularly appealing when implied volatility is low, providing a perfect entry for slightly higher premium. Okay, this is people that are gambling on options, okay? So I just thought it was interesting to kind of expand your mind. I'm just going to tell you what this look-back call option kind of is. Again, don't do it. We're just expanding your mind a little bit. We're just looking at the different possibilities of things that one could do with options. Okay. Again, this is on the buy side. We don't like that. So a look back call option allows traders to buy Bitcoin at its lowest price during a specified time period, offering a strategic advantage over traditional call options. So this type of option is particularly appealing at times of low implied volatility, providing a perfect entry for a slightly higher premium. So you're gonna pay for it, but the idea is that you get the lowest of the dip. So if Bitcoin prices do not drop, the look back call still offers a favorable entry point, but the buyer risks losing the premium if prices fall below the strike price, obviously. So let's say you think you missed it and Bitcoin's going up and up and up and up. This look back call option might be a way for you to get back in at a slightly lower price, but you're going to pay a premium. So you got to make sure that, the premium plus the price isn't higher than the current price. That would be that's your gamble. So if you do believe in Bitcoin confidently moving forward, but you think, there might be a pullback, but you're not really, skilled at timing the market, because no one is skilled at timing the market, and you don't know when was the right time to be timing the market. Therefore, traders facing this kind of predicament, there's a product called the look back call option. Okay. Look back call is an exotic option that gives the holder the right, but not the obligation, to buy the underlying asset at its lowest observed price during the look back period, whatever that look back period is. Okay. Let's see. Isn't Jupiter doing something, collaboration with Galaxy Digital? No, I doubt it. And the only reason I say I doubt it is because I don't think Galaxy Digital isn't really like with coins or participating with coin product. I mean, maybe they are, but I would doubt it. I would doubt it. I don't think so. But listen, Jupiter has done dumber things, and Galaxy has certainly done dumber things. So why not? Let's see. Is the reverse carry trade a real issue to the markets, or is it a nothing burger? The reverse carry trade, is it a real? No, I mean, people are going to try to skin every market in every direction all the time. I don't think anyone. The yen carry trade, when it unwound, it wasn't the unwinding of the yen carry trade that was precarious. It was, why was it unwinding? That's the real thing. None of these, niche markets or whatever are all that important. It's just the information that you get. So if you see a panic in some market, it is interesting to figure out why, or at least try to piece together why you think that panic is occurring. But I don't think any one of those specific markets itself is, some creating some endemic problem. I don't think 1% of computer chips in the U.S. were made anywhere near the U.S. Yeah, that's probably right. Okay, so the look back call option gives you the right but not the obligation to buy the underlying assets, say for instance Bitcoin, at its lowest observed price during the look back period. So instead of trying to pick the exact bottom from the current BTC price pullback from its record highs, a trader may consider a 3-month look back with a 1-month look back period. And so that means that the strike price is set at the lowest value in the first month, and then the call can be exercised at that level anytime before the option expires 3 months after the look back period, meaning you go back 1 month and go 3 months forward, right? And so if the Bitcoin price, for instance, dropped to 100,000 in the initial month before rising to say 140,000 within the following 3 months, the holder could require the issuer to sell them their Bitcoin at 100K. Now, I'm guessing that is an expensive option. I bet that sucker is expensive as shit. Anyway, its unique structure ensures that the call buyer benefits from securing the perfect dip, maximizing their profit potential by eliminating the need for market timing, minimizing by subtracting out the premium. So obviously the premium works against you because you have to pay that to play, but then you wouldn't have to time the market. You'd have a window of time that you could kind of pluck and say this time. So that's in stark contrast for traditional call options from centralized exchanges where traders must select a fixed strike price, which significantly increases the risk of a suboptimal entry, right? So yeah, there you go. I guess this is a product you can get through Orbit Markets. But let me tell you what the premium is on this sumbitch. The perfect entry price comes at a cost. The Orbit's look back call option is priced at 12.75% premium, making it 3.5% more expensive than a regular 3-month at the money call, which costs 9.25%. So the issuer of the option is taking on the risk that Bitcoin might drop, forcing them to give you a more favorable strike price. Now, so that's pretty interesting. Anyway, so that's the look back call option. So there you go. Everybody just got a brand new kind of call option. Yeah, look back call option. I still didn't find Trump's. I had read it earlier, but I didn't find it. The executive order. Not finding it. Oh, there was the one. Here it is. Trump's potential executive order seeks to dismantle perceived financial barriers for crypto businesses. Donald Trump is reportedly preparing to sign an executive order aimed at curbing discrimination against the crypto industry by U.S. banks. According to sources familiar with the matter, we don't know who the sources are, the order would introduce fines for banks that block transactions involving crypto companies. This means it would address the longstanding issue in the crypto sector where U.S. correspondent banks have often refused to process transactions related to digital assets. Chase did this to me before, just arbitrarily. They don't do it anymore, but they had done it before in the past. They had blocked transactions to Coinbase. I tried to send, and this is an interesting one. I tried to send $1 million from Chase to E-Trade, and they did everything in their power to hold on to that money. They froze the transaction for 7 days, even though it was a wire transfer. You know how long a wire transfer takes? A few seconds. Wire transfer. Oh, 7 to 10 days. Why? Oh, well, we have to check the security. I'm like, I did it inside the bank. I took the money out of my Coinbase account, and I sent it from inside the bank in a wire transfer. Yeah, no, well, the security, we got to do a security review. You're going to do a phone review from an Indian call center better than the people in the bank that checked my ID while we did the transaction. This is protocol. I'm like, it's not protocol. None of this is protocol. It's a bunch of bullshit. So you guys can sit on my money. Then their wealth manager called me. Oh, we should talk about what I said. Fuck you. Your bank is garbage. You guys don't know how to manage wealth. What are you going to give me 0.003% in my savings account? Go fuck yourself. Then what it's too is it cost them a lot because I was going to refinance my home loan through them. And then when the guy called me, he's like, hey, do you still want to do that? I was like, no, because you sat on my money for 10 or 14 days when it was all said and done. On a wire transfer. This wasn't a check from an insurance company. It's a wire transfer. You sat on a wire transfer for 14 days. You know what I finally did? I canceled it. I took the cash out as a cashier's check. I mailed the check next door at FedEx, and it got there in 1 day. So it was faster for me at Chase. Instead of wiring Morgan Stanley, I guess they're pissed off because you're taking your money out to another bank. Instead of wiring, which takes a few seconds, it took me less time to take my money out of the bank, get a cashier's check, go get an envelope, lick it, stick it, go send it FedEx on a weekend. It still got there faster. I might as well have just driven it there. Garbage. Yeah, Chase is trash. I mean, Jamie Dimon is trash. You don't need to look any past that guy. The dude is corrupt as shit. Anybody else would have been in prison. Anybody. That dude has committed so many crimes, like as far as fraud, like that treason level fraud. But you don't get in trouble when you're a bank CEO. You can't be held accountable. Oh, that's my traders, the London Whale. Oh, really? You didn't know someone had a $2 billion position on some bullshit and you didn't know about that? You were unaware. Bullshit. Dude, these guys, man, such snakes. It's another dude, is a scummy, the Elizabeth Warren type, self-important pride. I know everything, you know nothing. The facts don't matter to me. I know the truth. Like, shut up, dude. God. Anyway, it's that kind of, and that mentality, it permeates through their executive class. I bet the VPs, the higher level VPs, not the little bank douchebags with the jackets, but the actual VPs at Chase, at the C-suite and up executives, I bet they are all scummy and smell of the same stench as Jamie Dimon. They're all cut of the same cloth because he wouldn't keep anyone around him that wasn't a scumbag, because the scumbag don't know nothing else. Jamie Dimon rant. Yeah. All right. According to sources familiar with the matter, the order would introduce fines for banks that block transactions involving crypto companies. So the executive order could include monetary penalties and other forms of discipline for banks that engage in criminal discrimination. Here's what it should be. You discriminate against crypto finance, you lose your wholesaler's license with the Fed. You basically lose your prime brokerage status. You can't deal treasuries ever again. How about that? You want to be a piece of shit? Cool. You don't get to deal treasuries anymore. You're no longer a part of the system. Bye. Bye-bye. And that's how it should be. But it won't be. That's how it should be, but it won't be. Okay, so that's kind of cool. CZ, Sleazy, fresh out of prison, Sleazy. He said it used to be the corresponding banks in the U.S. block transactions involving crypto, fiat for buying crypto. This potential order opens banking for crypto internationally. Also, for companies that want to participate one way or another with crypto, it allows them to do that without panicking that they're going to get shut down. So this is good. That's a good thing. Yay. Hooray for good things. Yeah, that's where we're at. Okay. Let me see. There's some questions in here. Is Filecoin still a good investment? Conan, is it a good investment for you? That's what you guys got to ask yourselves. Is it a good investment for you? I don't own any Filecoin right now because I had sold off some position. I think I converted. I have to go look, but I think I converted Filecoin into SUI because staking and all this kind of stuff. And that was a few weeks ago when the markets got real turbulent. And I was like, well, I think SUI has a greater chance to move right now. And I had done some SUI lend. So I put it all over in SUI. But let me see. Where's Filecoin at? 330? I don't know. 330 is not bad. It ain't bad. Yeah, you're just seeing, this is just a risk. This is just the crypto risk curve today. Look, 1.824, 2, 3, 3, 9, 3. So it's just slowly going up the risk curve with these assets. It's funny how if you take that and flip it to the right, rotate it to the counterclockwise 1 quarter, you get a yield curve. You basically get a yield curve. It's funny. Okay. Craig, what up? All right. So we're going to switch gears. Well, maybe this is a switch. Maybe it isn't. We're going to talk about the catch-up fallacy. And I've been dealing with several people lately that I'm seeing behavior that's a little bit sketch. And then some of them, I'm catching them in behavior that's sketch. Sometimes they admit it. Sometimes they do not. And right now, the do not admit it group is bigger. So I thought, we probably need to talk about this. So let me make some little adjustments here. Let's go to our media. Let's probably go here. That one or that one? Let's see, that one. I think that one. I think here. Ooh, the catch-up fallacy. And this way, you'll be able to, all you home gamers will be able to participate. And let's go over here. And let's go over here. Let's pause that. I don't need that one. Let's go here. Let's go like this.
You're bad at math, but I'm giving you an A+ in confidence. Just doing what I gotta do. Extra credit.
Hello. You're late.
All right. So we're going to go over the catch-up fallacy, which seems to be infecting people lately. So let's where to begin? Okay. A lot of people, this I'm late to the game type. The market does not care when you showed up. Okay, let's start there. Let me get my charts up. Let me get all my charts up. Where is this one, by the way? Oh, do I have? Ooh, I have the ability to switch slides right here. Wow, bam. So, guess who doesn't care? The market. The market doesn't care when you got started. No one else cares when you got started except you, right? It doesn't care when you showed up. It doesn't care that your neighbor got rich in 2021 or 2017 or 2018. It does not care that your cousin's best friend's boyfriend's sister's uncle was mining Bitcoin in 2013. It doesn't care that you've fallen behind. It doesn't care that you think you need to catch up. None of that stuff matters. None of that stuff is even stuff. These are just weird anomalies in your mind. I know that you care, and this is where the danger begins. You're ascribing emotional values to things that are ephemeral, they're not real, And one, you should have no emotion in investing. And two, you should not have emotional responses towards swamp gas, stuff that doesn't even exist. So when people believe that they're falling behind financially, or that they're late to an opportunity, they'll start playing a different game. But it's not the investing game, and it's definitely not based on game theory. They start gaming or gambling. Okay? So today we're going to talk about the trap. We're going to talk about the mental pivot from rational investing to high stakes, emotionally driven decisions that can destroy your wealth faster than any old market correction ever could. And you see the signs, the people taking on way too much leverage to catch up, people, spamming, FOMOing junk projects. Oh, just a few meme coins. I'm just doing it for fun. Yeah, said every gambler ever. So the first part of this is the catch-up illusion. Okay, so let's say you have two investors. Let me see if we go slide 2. The catch-up illusion. Yeah, look at us. This is like doing some pro stuff here. And I guess we don't need the banner, right? Since we're covering this. Hold on. I think we've nailed that. You just go to here. Yay! We're so professional. So you have two investors. You have investor A and investor B. So Alice and Bob. You see why they do that? Alice, Bob, Charlie. Yes. Okay. So Alice started in 2014. Alice has been dollar cost averaging into the market. Alice held her positions through the ups and downs. Alice, smart. Alice, investing. Then you have Bob. Bob woke up in 2023. He panicked that he missed the boat. Or during COVID, he learned all about crypto. He's like, now, oh crap, I got to catch up. And now he's on YouTube learning how to 100x leverage his crypto tokes. Okay? Alice is playing the long game. Alice is investing. Bob is trying to warp time. Bob is trying to bend the laws of physics and nature to his benefit because he was too late, or just late. I don't know that there's ever such a thing as too late. Bob was definitely late. So the main problem is that Bob isn't investing. He's chasing. And, the chase is often a cover for a deeper emotion, and that is regret. It's like when the FOMO subsides, you're left with regret. Oh man, I didn't participate. But that's a flaw too, because you can't regret a thing that you never even imagined before. If you weren't willing to buy Bitcoin in 2013, you can't regret not buying Bitcoin because you weren't willing to do it. It isn't like you tried to get money out of the ATM, but the ATM was broken and you couldn't find a single working ATM for 15 years. 15 years. You've had fucking 15 years to do it in crypto. You've had a long time to participate. If you didn't, you don't get to regret. You don't have the right to regret. You can only regret something where the world conspired against you. I was going to buy Bitcoin. There was a bank robbery. I got shot. I went into a coma. I woke up and Bitcoin was 113,000. Shit. I regret. You know what? That person, Charlie, they got shot in the bank robbery while buying Bitcoin 8 years ago. Charlie has regret. No one else does. You ain't Charlie. So when people feel regret, especially around missed financial opportunities, they often respond with very impulsive behavior, which makes sense, right? So what do? You double down on your riskier bets. You overtrade to make up for lost time. I got a buddy that's doing this right now in the meme coin market, just lighting money on fire like an asshole. You FOMO into the latest meme stonk, latest crap altcoin, or some weird options play where, if I just take $10,000, it will become $160,000. No, it won't. But I saw a guy on CNBC. Yes, I know. You saw one guy out of a trillion people. The market is not a casino. Okay? I mean, I guess you could treat it like a casino. But I guess there's no jackpot for showing up late, right? There's no level up faster by pressing more buttons, like up, down, down, left, right, BA, select, start. It doesn't get you unlimited ammo and weaponry like it did in Contra. Remember that one? Contra was dope. Investing is not Contra. Investing, you don't, there's no level up play. You can't buff your weapons. You know, the only buff, the only level up is compounded interest. The only level up is do a fair amount of research, weigh that against market sentiment, try to front run a herd of asshole idiots, and maybe it works out. Someone yesterday was like, they were feeling bad because they made some bad decisions. And they were like, man, I hate seeing you guys make all this money and I'm kind of left behind. I'm like, well, one, you're not left behind. You got to undo the things that you've done. But you're not competing with me or Brandon or anybody. Nobody here is competing with anybody else here. Are any of the people in this chat next door neighbors with someone else in the chat and you guys are competing for a house on the block? Whoever gets there first wins the house? No. I doubt it. Maybe, but I doubt it. No one here is competing with anybody else here. You're competing against your portfolio and the effects of debasement, monetary printing over time. That's it. That is all you're competing with. So gambling versus investing, you must know the difference. If you do not know the difference, you're part of the data. So let's use game theory and let's break this down. Investing is a positive sum, long duration strategy. It is about compounding small advantages over and over and over throughout time, and the compounding effect of small advantages and the compounding effect of those tiny arbitrage wins. That compounding interest scenario is what makes you win over time. We did a breakdown. Brandon did the other day. I don't know if it was it Friday or yesterday? When Brandon did the breakdown of the option strategy, whether holding Ethereum and Bitcoin, borrowing against Ethereum and Bitcoin and selling options against them, or just pure 100% selling options, which would have been the better scenario. And it was very interesting information that he got in that. So small compounded gains and arbitrage advantages over time. And intellectual arbitrage is a big part of that. Positive sum, long duration strategy, okay? Gambling in markets, gambling is a zero or a negative sum game with very short feedback loops. It feels exciting until you've lost everything. And guess what? You will lose everything. If you are gambling, you will lose everything. Everything. Oh, no, for me, I'm different. You're not different. No one's different. James Wynn, oh yeah, I'm rich, I'm going to be a billionaire, and nothing. People keep giving him money, and he gambles, and nothing. How many times do you have to see and nothing to realize they don't build casinos because casinos lose money in Vegas? They don't keep building them and putting fancy new lights on them and giving away Ferraris to rich Asian guys because they lose money, right? They build new casinos, they don't build new gamblers. Okay, it's fun until it ain't. So you need to be aware if you are slipping into a gambling mode or a gambling mentality. There are some signs. One, you start increasing your risk profile after a loss, hoping to get it back, recover quickly, double down, that kind of thing. Okay. Two, we talk about this all the time. You can't sleep at night because of your open trades. You lose sleep because of your positions. You lose in sleep, then you are over leveraged or you are over invested and you are gambling. Three, you stop doing math and you start doing stories. You start being a storyteller. Like, this coin has to bounce. This one's bound to do this. This one's likely, they have a partnership with mystical floating glimmering pastel being in the dark for like all this bullshit. Oh, ISO 2201211022. Here it comes. It's the standard. July 15th, guaranteed. What year? Oh, 2018, 2019, 2020, 2020. Come on, man. God damn. Stop the storytelling. Storytelling is not math. Math. Do math. Okay? Do math. 4, you're over leveraging. You're betting more than you can afford to lose, or you're using margin to chase speculative returns. Okay? And this is why we're very careful about margin. If you're going to use any margin, you better be very, very careful about how you employ that. I would never employ margin as a buyer, only as a seller. Right? Like the one margin strategy that I do talk about is potentially using margin to buy perhaps IBIT and then sell deep in the money calls, guaranteed to get called out, where you're just doing it to use your margin to grab some time decay. That's all you're doing, is you're just playing the time decay. And you got to see, can I get far enough out of the money where I can absorb a loss in the price of the underlying asset without getting, and still get called out and still collect my premiums, right? My time decay part of the premium, my theta. So that would be, and even then, there's still some speculation in there. I'm not a big fan of it. I'm not ready to do it. I'm not ready to do it yet. Anyway, and then the 5th sign, you start moving the goalposts. So for instance, you had a 10% target, then you make it 20%, then you make it 50% while the price is moving. Oh, well, maybe nothing. Maybe nothing. Ain't no maybes, baby. You've now started what we call in the gun game, spray and pray. You hide behind a wall, you stick your arm over the wall with a gun, and you spray and pray. There ain't no technique in that. And each of these is a signal that you're no longer playing the game of investing. You are playing roulette. You are gambling. Okay? So let's talk turkey. No. Let's talk leverage. So with leverage, there is this illusion of control, right? Leverage is a tool, not a strategy. If you're, I plan on getting leverage. No. Leverage is a tool where, if used wisely, it can amplify gains. Used emotionally, it will turn your portfolio into a time bomb. Okay, and so here's why. So leverage shortens your time horizon, right? You no longer think in terms of months or years. You're thinking in terms of hours or days. Leverage amplifies your emotions, right? Like a 5% move becomes a 50% change in your capital. So if you're an emotional person and you thought it was bad waking up and Bitcoin's down 1.8%, how about waking up and your position's down 50%? Like James Wynn, dumb asshole, lost $100 million in 3 weeks. Fucking idiot. He will never make that money again the rest of his life. If you gave him $100 million, he would squander that shit. He's a loser, and losing is a habit, and he's a loser, period. And leverage amplifies the emotions that work against you, right? Leverage tricks you into feeling smarter than you are, right? Until one little unexpected move wipes out all of your shit. It wipes out months or years worth of work. And now you're backwards, you're in debt, you're stuck, right? Leverage tricks you into feeling like you are a better investor than you are, because leverage is a very, very dangerous strategy. Again, as a strategy, it's a fail. As a tool, it's got utility. So in game theory terms, leverage moves you from a low variance, repeatable strategy to a high variance, very fragile system. And fragile players do not last that long, right? Like in the summer, if you build a snowman, nope. So what should you do instead, right? We need to a rational reframing of our mindset. So if you fell behind, good. That feeling, if approached honestly, can be a catalyst for really good decision making. So you realize, okay, I'm behind. If you think in those terms, I've got to catch up. I'm not sure who you're catching up to, but whatever. If that's the carrot that makes you run, So here's the reframing. You're not behind. You're beginning your game maybe a little bit later than other people have. And time is still your ally if you stop trying to compress the journey. Don't try to run a marathon in 3 miles. Because marathons aren't 3 miles, right? Don't compress the journey. Focus on asymmetry, not speed. So look for investments where the downside is relatively limited and the upside is uncapped. These exist, but they require patience and discipline and not leverage. Play infinite games. So in finite games, you win or you lose. In an infinite game, the goal is to stay in the game. Gambling is a finite game. Infinite games are investing, right? For next week, roll it, right? That means that preserving capital, managing risk, letting compounding work and compounding interest work in your favor, right? And then you need to replace emotions with systems. You have to systematize what you're doing. Someone asked me yesterday, well, how do you feel when this happens with this? I don't feel shit. It just doesn't, that's not what, I just don't do that with investing. I make a decision and then I have no control after what happens after the fact. I don't have control of world markets. So I make my best decision and I let it ride. Emotionally, that is the end of it. If it goes down, it's because it went down, because universe. I have zero control over it. So build a repeatable process. Stick to it and remove feelings and emotions from the equation. They do not belong. If you feel anything, you're not ready. Period. I mean anything. If you feel anything, oh man, the price is down. Deleverage. You own too much. And you know when you're ready to get back in? When the price movements make no difference. None. That's when you're ready to invest. Otherwise, doesn't mean you're not going to make it. It just means you're going to have a tough path because you're going to be grappling with your emotions all the time. It is going to be rough, man. Rough. And I don't know how to unemotion people. You have to deleverage and de-risk to the point where you're no longer emotional. That's what they say. Trade with money you can afford to lose. No one here does that. They all trade with everything. I'm trading with the whole thing. Goddamn, 100%. Okay, I mean, you can do that, but if it goes wrong, you're going to be depressed, maybe clinically, right? So my final thoughts are play the long game. I've said this quite a bit, but I will say it again. No one builds generational wealth by catching up, okay? They build it by staying in the game, avoiding ruin, right? Letting time work, right? Time and compounding interest are a very kind of quiet magic. I like that. I like that idea, that quiet magic, right? The best investors in the world don't chase anything. They accumulate. They don't sprint. They just jog. Maybe a slight stride. When you feel tempted to throw a Hail Mary, don't. Take in 10 breaths. Go walk away. Put your laptop down. Go away. Drink a shake. Probably not coffee in this case, unless it's a chocolate foam cold brew from Starbucks, which are delicious. Take a step back and remember that you are not here to win fast. You are here to win quietly by outlasting everyone else. You know how you do that? Don't get so fucking pissed when things don't work out your way. Because mostly things don't work out our way. They just don't. I don't know what to tell you. Let me see. I think I had a cool chart. Let me see if I can find it. Let's see. Uh-oh. File expired. What the smoke? I had a really cool chart that juxtaposed the kind of the trading strategy and the non-trading strategy. Let me see if I can. I'm always good about keeping these things. Let me see. Oh yeah. Let's see if I can open with preview. Let's see if it will allow me. File. I think I have to save it first. Save. It's a good chart. Bam. Okay. So let me remove this one and let me remove from the studio. Let me add an image file. Oh man, it shows it. Let me. Interesting. Give me 2 seconds. Let me find this thing. It's here. I'm staring at it. Why, pray tell? I wonder. Okay, that's weird. Okay, let me do something. I can get it. They can't stop me. You want to make me be clever? I'll be clever. All right. I'll just copy and paste picture on my screen that I can't get on my screen. And I'll take that picture and add it to my screen. Bitch. All right. So now that I have that, I can add it and we can look at it. Yes. This is, let me pull the comments just for a second. This is the steady compounding versus leverage-induced ruin, right? The highly leveraged play, dotted line, crashes, and it crashes over and over. And this is a repeated pattern, okay? And this is an average for different for very small portfolios, but well, actually not small, getting up to about 50K. But the point is, you high leverage portfolios, just because of anomalous behavior in markets, they crash on a pretty regular basis. And your steady growth curve, and this is a boring steady growth curve, but what you don't see is, and I have another chart, which I'm not going to go through that whole process again, but if you go out about 3 years with compounded interest, all of the sudden, this orange line is way on top of the dotted line. Why? Because the perpetual crashes that come with leverage. And I use leverage as a proxy for all of this kind of gambly, bullshitty, stupid behavior. So let's be mindful of not getting destroyed in markets. Let's be mindful of leverage. Let's be mindful of our own desire to catch up and that kind of gambly mentality. And let's not do it. And no, the XRP bear, that was so funny. You remember all that? That was so stupid. Oh God, anybody that was around in the original like Ripple XRP days, it was so such stupid shit going on. Ripple Riddler, the 589 bear, 589. Like, it's so stupid. Yes, risk management, super important. But it's emotion management. I mean, most of investing is emotions management, and I just don't see very much of that going on. It's pretty bad. So you guys got to get a hold of your emotions, and you need to make sure that you have the emotional dexterity for investing at all. And I'm going to say this, most of the people here do, especially in this group, because we got a smart group, but not everybody here. And you know who you are. You're like, no, he's not talking to me. Yes, I am. You're going to go look in the mirror. Do you get mad or unhappy when prices go up or down? Either way. So you're not looking for happiness in investing. It shouldn't even rate. You're looking for the kind of peace and serenity that making consistent progress will give you. And because this is a race that will never, ever stop. There is no, you guys realize this, there's no end point. There is no exit. You will be doing this forever. You'll be managing your investments, your value units forever. And maybe you offload it to your robot, to your home helper robot or whatever, your family robot. What's the one on Foundation? What's that one? The one's name on Foundation that like she's actually been in charge of like the Empire. She's been in charge of Empire the whole time. She's a robot. You're not supposed to have robots anyway. Until you have that robot, until you have it, there is no exit. Even Barry, there is even not even an exit for me. If you want to ask me how much is enough, I don't think there's a number, because they can always print you into obsolescence. So because they can do that, none of us ever get to quit. Ever. But you got to find out right now the level that you're willing to participate that won't ruin you emotionally. That's what you got to figure out. Remember, avoid ruin. Avoid ruin. All right. On that note, stay in school. Don't do drugs. Don't do anything my poor and solvent drunk, struggling meth grandmother or Brandon wouldn't do, which is very little. And we will see you tomorrow.
Killing time, no place to go. Everybody's feeling low. All alone in the street like low. You fall into your head. It's all that you want. It's all that you need. Take some time to make believe. It's all that you want. It's all that you need. Just some time to make believe. It's all that you want. Killing time.